Why traders make bad decisions after a winning trade. The trade is closed, you see the profit number, and for a few seconds it feels like everything is under control. The analysis you had worked on, the entry you were waiting for played out, and your mind is calmer than it was just a few minutes ago. But this is exactly where something dangerous can happen. You start spotting opportunities faster. A half-formed setup suddenly looks attractive. A very average entry starts to feel like a great chance. You might even tell yourself, I'm in the zone today, let me take one more. The profit isn't the issue here. The real danger is the mental state that often follows a profitable trade. In this video, the goal is to understand why bad decisions are more likely after a win and how to stop a good trade from becoming the trigger for a bad one. Part 1. What changes in the mind after a win? After a successful trade, a trader's mind usually shifts into a state of high confidence. At first glance, that sounds good, but without control, it quickly turns into carelessness. Before the win, you might check the chart more carefully, think through your stop loss, respect the risk to reward, and avoid rushing into entries. After the win, the mind starts saying, I read the market well. That one sentence alone can loosen the filters you followed so strictly on the first trade. This is where the danger begins. The previous profit should not dictate the quality of the next trade. Each trade needs to be evaluated on its own, not through the glow of the last winner. Part 2. How does profit trick the trader? A winning trade often creates 3 mental traps. First, a sense of being unbeatable. After a few good decisions, a trader can feel like the market is figured out. That feeling leads to trades that would have been rejected earlier. Second, increasing position size just because of the win. The thought appears, even if this one loses, it will just eat into my last profit. This is dangerous because the next trade should still respect the same risk rules as before. It should not be sized based on the money you just made. Third, seeing extra opportunities. After a win, the brain wants to repeat that feeling of the success. It starts treating every small move in the market as a possible entry, even when the setup is incomplete. At that point, profit is no longer just a result. It has become a source of excitement that pushes you into trades that aren't worth taking. Part 3. The classic mistake, the low-quality second trade. Some of the most painful losses come right after a really good win. Imagine a trader who has just taken a clean trade on gold, great entry, logical stop, disciplined exit. After closing it, they open the chart again and start hunting for the next move. This time, the setup is not on the same level. The price is stuck in the middle of a range, the stop loss distance is awkward, and the confirmation is weak. Even so, the trader enters because the feeling of the previous win is still fresh. This second trade is usually built on weaker analysis but taken with a stronger confidence. That's the dangerous combination: lower quality, higher confidence. Part 4. How professionals and emotional traders differ after a win. After a win, an emotional trader asks, what can I buy or sell now? A professional trader asks, is there still a valid setup here? These two questions lead to a completely different paths. One is trying to repeat the good feeling. The other is trying to repeat a good process. A professional does not see a profit as the end of the job. Profit is simply a result that needs to be recorded, reviewed, and then the mind has to return to a neutral state. That's why, after a win, a professional doesn't rush back into market. First, they step back, write in their journal, look at the chart again without the emotional noise, and only if a new setup truly has quality do they consider entering. Part 5. How to avoid bad decisions after a win. First, take a short break after each win. You don't need to disappear for hours. Even a few minutes away from the screen can pull your mind out of the emotional high. Second, analyze the next trade from zero. Ask yourself, if the previous trade had not been winner, would it still take the setup? If the answer is not a clear yes, you're probably being influenced by the last profit. Third, don't suddenly increase position size just because you made money. Position size should grow according to your plan, long-term performance, and risk management, not because today you feel in sync with the market. Fourth, set a maximum number of trades per day. Sometimes the best thing you can do after a strong winning trade is to end the trading day, especially when the setups that follows are weaker. Fifth, don't treat profit as a license to take more risk. The money from the last one belongs to your account, but it should not make you take the next trade less seriously. The market charges very quickly for extra confidence. Part 6. Summary. After a win, the real danger is that the trader's mind starts taking things more lightly, even though the market itself hasn't really changed. High confidence without a plan can easily reduce the quality of decisions. A good profit should make you more disciplined, not more impulsive. If, after a win, you still check the setup, manage risk, and wait for real confirmation the same way, you are moving closer to a professional trading. But if profit makes you feel like anything you touch will work, that same profit can set off a long chain of bad decisions. Let us know in the comments, after your first winning trade of the day, do you usually trade more calmly or more aggressively?